What's up, everybody? Welcome to the Stocks channel. My name is Cory, and today in the stock market, we're pulling back yet again across the board in the indices, which so far is going exactly to what we expected. So what should you be watching from here? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. So today in SPY, we were down 1.26%, and we are tracking this pullback, which, as I told you just last night, I'm expecting to see this happening in a three-wave structure, and I want to see this 50 EMA and this 20 simple moving average cross over, the price action, use them as support, and then bounce, break out, and take out this high. And that's going to be my confirmation that we're going back into a bull market, and we should see a bull rally going through the summer. So even though this is what I want to see and this is what I expect to see, the stock market does not care what I think, so take this with a grain of salt. What I mean by that is we're already starting to get this three-wave structure, and there's no guarantee we have to go that low. And these moving averages are positively sloping, so they could come up and catch the price action before we get a deep retracement. So don't just think that we have to keep going lower just because the moving averages are currently down here. They are moving targets, and they are currently positively sloping, so they are rising. So don't completely ignore this very strong support zone right around 450 to 448. This is a support level that could hold up, and we could see price action bouncing from here in the most bullish scenario, and then come back out here, get confirmation with the breakout above 462. So don't get cute with your timing and trying to catch the bottom, because I know a lot of you were trying to do that down here and missed a lot of this very bullish rally because you were trying to milk every single dollar out of the price action. While it's not a bad idea to get good risk reward setups, don't completely miss the next rally if we are going into a bull market just because you expect to see SPY pulling back to some specific number and we don't actually go that low. So right now, watch very strong support at 450 to 448, and our 50 EMA is just above 445, and our 20 simple moving average will also be around that support zone of 444 to 445. So that will be a very strong support area of confluence. So don't rule out the possibility that we only pull back just a little bit more, and then in the most bullish scenario start to rip from here and get confirmation that we're entering that bull rally. Remember, once this 20 simple moving average crosses the 50 EMA, we will have the full bull trend, and then we'll just need price action confirmation that we are entering the bull market with the breakout back above 462, and we will have price targets at 470 and a retest of the previous all-time high at 478. Now, there is always going to be the scenario that we slice right through support, so if we start to see high volume selling and we start to see huge volume picking up, and we start to slice down through the 50 EMA and the 20 simple moving average, then you do need to be a lot more cautious. But right now we don't see that. We don't really see high volume selling, and we're still well above all of our critical support. So don't be nervous about buying the dip. Just set your risk and plan accordingly. And if you're wrong, you can take a small loss. And if you're right, you have a great risk reward setup, which could be the next very impulsive bull rally off of these support levels. Jumping over to the NASDAQ 100 triple Qs, it's going to be very similar to SPY. And remember, we still do have this price target at 377. And I don't typically do this, but we will do this today. And we'll go ahead and set up a quick risk reward setup. And basically what I'm doing here is I'm setting up our loss if we break down below the 50 EMA and our reward if we do reach our price target. And you can see this is a very favorable risk reward ratio with just over 2.0. And this is definitely a setup that you might want to consider. In this event that the 20 simple moving average comes back up here and crosses the 50 EMA, that is a very strong support level to set your risk at. And you know our price target is up here around 377 and then 382. So this is a great trade setup that you might want to consider. And if you're wrong, you'll know as soon as we start getting daily closes below these moving averages and we start breaking down through support. So the triple Qs are going to have strong support right around 359 to 355, and our 20 simple moving average will be right around 351 to 352. So this is coming into a very strong support zone, which could define the next bull market rally because we are about to see these moving averages cross over, or at least attempt to do so. So don't rule out the possibility. This is a great risk reward setup. And the reason I'm even bothering going over the risk reward setup is because I know a lot of you are just going to assume that the triple Qs have to come down lower. And if they don't actually come down lower, you're going to be sitting in 100% cash or even trying to short this market and completely miss the next rally, just like you likely missed the rally that we just had. So don't be so specific and so afraid of taking on some risk, because these are still great risk reward ratios and we have very bullish price action, and we are setting up to have the full bull trend in the very near future. So watch those strong support levels, and the next bullish breakout will be the close above 372. And then we do have that price target at 377 and 382. So those will be your most critical resistance levels. So don't miss this next rally if we are indeed getting it. And just like SPY, if we start to see high volume selling and we slice down through 350, then you can get a lot more cautious and plan on more downside. On the Dow Jones, we were down 0.83%, and we're coming right back down to retesting that 50 EMA, and we're getting the successful retest so far because that level is holding up as support, and our 20 simple moving average is very aggressively sloping. So once it crosses back above the 50 EMA, we will have the full bull trend. So your very critical support levels in the Dow Jones are 345 and 344. And if we break the 20 simple moving average, we could still retest the breakout at 340. And that will still be a higher low, which is still a bullish development in the price action. So as long as the Dow Jones is above 340 and we don't see high volume selling, I want you to stay bullish. And the next bullish breakout will be the close above 353 with price targets at 356 and that full gap close at 360. Also, just keep it in the back of your mind that with this bullish setup in price action and trend and a gap to fill at 360, it is very likely that the Dow Jones is going up there to fill that gap sooner rather than later. So don't forget about that gap at 360. On the Russell 2000, we were down 2.37% today, and you can see the Russell 2000 is getting a very beautiful ABC structure, and we are coming back down to retest the 50 EMA and that 20 simple moving average. So if the small caps are leading the way lower, we're getting a very nice corrective structure. From here, we need to start to see a bounce off of these support levels, come back up and close above 212. And that should be our confirmation the small caps are going back into a bull market. And I will say if we start closing above 212, I think it's very likely we run back up to that, close that gap at 228, which will be a nice price target for a mid to long term swing trade. So the next time we bounce off of any of these supports and come back up here and close above 212, that will be incredibly bullish. But there is the possibility we're slicing down through this moving average and we're coming all the way back down to about 198. And of course, if we lose that support, there's still the possibility we close the gap at 195.7. So if you start to see high volume selling and we slice down through more support, just watch for that gap close because that will be a very strong support level as well. Otherwise, we could still bounce off of this. This could have been a fake out down below the 20. We need 2 daily closes below this level before we assume we're going lower. So watch that very critical level right around 204. And the next bullish breakout above that will be back above 205 and then 207. On the Arkk ETF, we were down 5.7% today, and we saw a very hard rejection at that resistance level at 71. So just like I told you, don't get overly bullish on Arkk until we get 2 daily closes back above 71. And so far, we only have 1 daily close above that level. From here, we could come back down to retest the support right around 64. And if that support level fails, you're looking for the full gap close at 54.7. The bullish breakout is back above 71, and then we will have resistance at 77.5. On the VIX, we were up 13.24%, and the VIX did close back above 20, but overall, this is still going to be bullish as long as the VIX doesn't spike out back above 24. The VIX is in a bear trend, and we had multiple closes below 20, so this is more than likely just a spike in volatility during the pullback. Once the pullback is complete, I expect to see the VIX getting crushed back down below 20 and eventually closing below 18, and by then we should be in a full-blown bull market. If at any point the VIX starts spiking back out above 24, then I'm completely wrong on my suggestion, and we're likely going down for another leg lower. So watch that very critical breakout. If we do see the VIX above 24, get a lot more cautious. On Bitcoin, we're currently down around 1.5%, but overall, we still have an incredibly bullish setup. We have the full bull trend, and we still have the price target all the way up there at 52,000, and it does look like we're very close to consolidating below resistance, building up enough energy to blast through resistance and go hit that price target. So the next bullish breakout will be a breakout above 47 to 48,000 with that price target up there at 52,000, and we will have slight resistance right around 51,000. As long as we're above 44 to 43,000, I want you to stay bullish on Bitcoin because we do have the bullish price action and the full bull trend. So there's no reason not to be a Bitcoin bull while we have this very bullish setup. On NVDA stock, we were down 5.22% today, and we're getting a very nice setup for another long trade because we're coming back down to retest the breakout, which is our 50 EMA and 20 simple moving average, and we did gain the full bull trend today. So just like I'm looking for on the indices, this is the setup that I love to watch for because this is telling us we could be entering another bull rally as long as we successfully retest this support, get that bounce, and come up here and get the breakout. So the breakout level that I want to see will be back above 267 and then a breakout back above 284. And then we should start to see NVIDIA bouncing up and going into those low 300s. Now from here, if we do lose the support level at 256, which is going to be a very strong support level, then we will likely start selling off very quickly down to the next support leg lower at 244. And if that level fails, you're looking for the full gap close at 230. And I do think that will be a very strong support level. So 256 is very strong. So if that breaks down, that will be bearish. So you're looking for 244 to 230 below that. But right now, this is going to be a very successful retest if we bounce off this support and then start to break out back above 267. That will be a very bullish setup for NVIDIA. On Tesla stock, we were down 4.73% today, and we did get rejected at our resistance trendline, which if I zoom out here, you can see where that resistance is coming from. That was a very hard rejection, and Tesla did get a little too vertical for my liking, but overall, we do have the full bull trend, and we do have very bullish price action, and we can't ignore that giant gap down there at 1021. So if we lose this support level at 1065, look for that gap fill at 1021. And as long as we stay above about 1000, this is still going to be a very bullish setup, but our strongest support level will be down here right around 960. We do have the full bull trend and we have bullish price action, so there's no reason to think that Tesla isn't going higher once it sees a pullback. So any of these very strong support levels could be a buying opportunity. But as long as that gap is open, I would be very cautious that Tesla is likely going to retrace back down to 1021. On Apple stock, we were down 1.89% today, and Apple stock is still looking incredibly bullish, and we're only about 1 to 2 days away from having the full bull trend. So from here, we could come back down and retest the low right around 172 or the breakout level at 168. But overall, this is a bullish setup, so I do think Apple is going to make that new all-time high and reach my price target at 188. So you're looking for resistance now at 176, 179, and 182. And on the breakout above 182, we should reach that price target at 188. And yes, we could go higher than that. To the downside, if we start breaking down below 172, watch for the retest of the 50 EMA and the breakout level right around 168. And as long as we're above 168, I want you to stay bullish on Apple stock. On the financial sector, we were down 0.63% today, and we are finding support at the top of that gap. And at this point, it's very likely we're going to fully close that gap at 37.5. Overall, we are having the price action below all the moving averages. So if we don't start to bounce and get back over that 50 EMA in the very near future, this can start to develop into a bear trend. On the industrial sector, we were down 1.42% today, closing back below all the moving averages on the price action. But overall, we are getting a bullish setup. If the price action can bounce and start breaking back above the 20 simple moving average, we should regain the bull trend and then very quickly go close that gap at 106. On the healthcare sector, we were up 0.21%, and we have a very strong bull trend with very bullish price action, so it's very likely that we're trending up to go close the gap at 141. On the energy sector, we're starting to get a breakdown in the support trendline, and we were down 1.57%. If we start closing below the 20 simple moving average and we lose this support trendline, it's very likely that we're going to finally see the correction in the energy sector. So jumping back over to the S&P 500, we are very close to having the full bull trends across the market in all of the indices, and we're very close to getting evidence of a successful bullish breakout, which will mean that we're returning to the bull market. So as I always tell you, block out the noise and follow the price action. And right now the price action is incredibly bullish. And as long as we can bounce off support and break out and successfully get that retest of the bullish breakout, we should go into a sustainable bull rally that could easily last 4 to 6 weeks. So follow the price action and try to check your bias at the door, because overall these next few days are going to be very critical to tell us if we're going back into a bull market or this was all just an ugly bull trap and a bear market relief rally. As I've said time and time again, it's my opinion that we will successfully retest the breakout and we will return to a bull market, because this price action is incredibly impulsive, and I always go with impulsive price action over gut feeling. So even though there's a lot of noise out there and talk about recession, and there's a lot of talk about what the Fed's doing, you can't ignore what the price action is telling us. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. With all of this market volatility, I think now is the best time to be a bank member. You can find out all of the information and learn how to subscribe by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I'm doing intraday updates and analysis and bringing new trade ideas to you weekly. So if you're interested in joining the Stocks Channel Trading Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.